Hey, what's going on, everyone? So today we're going to be taking a look and seeing how much my portfolio paid me over the last month. Now, my portfolio here is nicely named Dividend Dentist. We've been actually working on this portfolio for a couple of years now. So let's kind of see how the portfolio has been performing and then talk about the dividends that paid out and also see where we are so far for the year in comparison to the year prior, because I like kind of doing those comparisons to see how we're growing. So as I mentioned, the market's obviously going up and down. We're currently sitting at $69,039. You can see over the last day has not been so great, but no worries because we're in it for the long term, so short term is no big deal. Although this is definitely not from our highest we've had on recording, but yeah, let's keep moving along. Let's see, for the last week, you can see that we're actually still down about $1,300, which is about 2%. And then if we go to the month, we're actually down $7,400. Like, that's crazy to see in such a short time period, and that's about 10%. And then if we go to the quarter, we're actually down $6,100, and you can see here we actually almost earned $200 in dividends in the last quarter, which is pretty cool. Real quick too, if you are curious, this is M1 Finance. This is what I like to use when it comes to investing for the long term and like dividends, and just most of my investing is in here aside from retirement. If you want to check them out, I'll always have a link down below. Sometimes they do have a nice little bonus for using my link, and then it does help support out the channel, so you get more free stuff like this. So let's go ahead and take a look at the year now. Year, we're actually down at $3,400. But check this out, we made almost $641 in earned dividends. And then if we go to our all-time, we are down to a whopping $2,400 in total gains, close to 1,000 of which has been just dividends, which I'll do a separate video just talking about that here soon. But yeah, it's pretty crazy to think with the market going, as crazy as it has been over the last couple of weeks. I'm still buying in. You can't really see it too much over here by itself, so I'm gonna like zoom in for that year, so you can kind of see right over here. This whole time period right here has just been, obviously we took that nice dip, and then I just kept buying and buying. Things have gone up, and then they're still going down. So it's been a pretty crazy roller coaster ride for a lot of people. I actually get excited about this. It's still a little nerve-wracking, I won't lie, but I do get excited because I am buying things at a cheaper price point. There's quite a few of my stocks here as well too, that if we go to the unrealized gains, you can see here unrealized is actually down to $300. That's pretty crazy too, because we were up fairly high just back in like October, November timeframe. But you can see, some of the really tough holdings right here, like Square, Amazon, Facebook, Airbnb. Fun enough, none of those paid dividends. So not only am I taking a hit from the actual, value of the shares, I haven't gotten paid any dividends from them, because one thing I do look at as well too. So if we kind of go back here, one of the stocks that has kind of been taking a toll, I was like trying to think right now, and I lost my train of thought. Has been like Nextera Energies is one example here. So I'm actually down $81, but the market value is actually down $143. And the reason it's less on this top part here is because I actually earned some dividends. So I've already gotten gains from this company, whether I sell them now or wait. So if I sold them right now, I would still be at a loss of $81. But because they paid out a dividend during that time, I actually am taking less of a loss than if they hadn't, which would have been $143. But anywho, so just kind of going over that, that's a really great thing to look at when it comes to dividend investing, is that it actually can help you out even in a negative market to see the value of holding in long term, because these companies are paying out even when the market is going down. Obviously, companies can, cancel their dividends, so keep that in mind. But nonetheless, most of these companies still stick with their dividends and still do really nice increases. So let's go ahead and see how much we earned in dividends for this month, this last month, I should say. And it's a whopping one company that is paying me out for the month. Now, I'm trying my best not to be involved in companies that are paying out in months that I don't get paid out a lot, only because they pay out dividends. I'd rather have the companies I want, whether it means one month like April, where I get very little when it comes to dividends as far as the number of shares. Because you could see here our total for the payout on April 29th from NRZ was $32.56. And again, I'll show you guys what it was last year, as well as, how everything is looking so far for this year. Because if you look, the last one before that was almost a month prior. So we had to wait almost, 30 some odd days from the Ross payout to the NRZ payout. So there's a lot of time in between, and some people are like, well, I want to have, dividend payouts every couple of weeks, and go for it if that's your prerogative. I'm not investing in companies because I want those payouts sooner. I'm investing in these companies because I like them. I like their numbers. I feel like they're going to be around for a long time. And, most of them just so happen to pay at a certain time. And, that just means some months I'm not going to have much, and then other months I'm going to have a lot more, and you'll see that here in just a second because we're going to jump over to my spreadsheet as well. But just in case you did miss out, like the last couple of payouts have been pretty solid. Like if you look at here, like obviously we just talked about that $32, but you saw Ross last month was 15, DLR was 12, Lockheed Martin 17. Like these are pretty solid numbers, and just to kind of give somebody some hope if you're just getting started with dividend investing, go back to the very beginning, March 14, 2019. I mentioned I've actually been in this since January of 2019 with this portfolio. I got paid out from Microsoft for 2 cents, and then from VOO, 64 cents a little bit later. And then you can see 3 cents, 80 cents. So very small amounts, but nowadays I'm getting much larger, totals into my actual portfolio, which then I use to reinvest back into the portfolio itself. I don't tend to reinvest back into the company that paid out the dividend unless that stock has taken a toll. I usually take that money and invest it in stocks that are kind of on their 52-week low if those numbers still make sense to me. Now, let's go ahead and go to the spreadsheet here. I'm going to switch out my camera just a little bit. So this is a little like dividend spreadsheet that I put together. If you're interested in purchasing it, I will have a link in the show notes if you want to check that out. It's $5, helps support out the channel. But what this does is I plug in my numbers right over here, and it kind of gives me a nice breakdown of how I'm doing. And I'll kind of move the screen around a little bit too so you guys can see. But for the most part, what I want to do first is just go over where we are right now. So let's do like a nice little zoom in here. And I think I lost my pen because there we go. So you can see here, I just put it in for April of 2022, $32.56. And you can see here, if we go 1 year back, because I do like to do comparisons, I made $18.96 a year prior. So we're looking at a really healthy increase. I believe when I did the math, that was like a 70% or 71% increase from the year prior. Now, obviously, I'm investing more money in there. The companies that are paying out the dividends, or in this case, this one company, has increased their dividends since that point. And so there's different factors that come into play. Maybe at that point, maybe I had other companies here, but how much I've been investing over the last year in that one company that's paying out in April has really helped it grow. 71% is a huge increase from the year prior. And, if that consistently goes that same route, which is not guaranteed, 2023 is going to look really good. Same thing with 2024, and it's just going to keep going. Because if we go backwards, 2020 was $1.83 and 2019 was a whopping 64 cents. So you can see the evolution of how much the money is growing, how much we're getting paid out in these dividends. And then if we scroll down, so let me switch this over and clear that out. So if we scroll down here, you can see so far for the year, we've actually earned a total of $238.90. So far for the year, you can see, because now we're in Q2, this is the first month out of the 3 for the quarter. So when you compare it to 2021, obviously we still got a little bit of ways to go. But so far for the year in 2022, we are already well ahead of where we were in 2021, because this percentage right over here, I just wanted to do it from year over year growth. So this is 2021 compared to 2022. It says negative 53.55 because that's how much we are so far to get to 2021, but yet we're only 4 quarters in comparison to all of 2021. So as we keep going and getting more payouts, we should hopefully, my goal would be to have a growth of like 20 to 30, maybe even 40% from where we were in 2021. So I think that's going to be very achievable. Obviously, investing right now in the market with everything being so down, our yields are going to be really, really nice investing in the companies that we are already invested in. So we're just getting in at a better dollar amount, which will help us get those payouts once those come around, plus those dividend increases. Huge fan of. I did add the pay per hour because I've seen some other people do it, and I thought it was actually really cool. Some people do it like in a 40-hour work week. I just do a pay per hour in a 24-hour period. And the reason I do that is because I want to be earning money when I'm sleeping, when I'm awake, when I'm doing activities or anything else. I just want to know how much I'm making per hour as of this year. So with 4 months in, you can see right over here, plus our current total for the year, which is $238.90, I'm making 8 cents an hour. Like, I don't know about you, but for having done nothing in that, time period, essentially earning these dividends, that's a really good payout. And I'm obviously going to want to increase that to $1 an hour and $2 and hopefully one day even like $10 an hour. That'd be crazy. Our monthly average right now, just for M1 Finance, is $59.73. This hasn't been updated just yet. So, because this right over here is how much actually got put into the account, where the earned dividends that we see over here, these are accounted for but not paid out just yet. So that's just something we have to keep in mind when it comes to going through that. And what I also want to do is switch over to my total dividends. So this is including with Vanguard, which is what I also have. I'm going to show you right over here. So far for the year, we're sitting at a total of $511.57 with M1 Finance and Vanguard all wrapped up into one. So in the 4-month time period so far in the year, plus that total right there, we are earning actually 18. Oh, I took away my pen. We are earning 18 cents an hour in total, which is also really, really cool when you consider that. Again, some of that is obviously retirement. Right over here in total for the first 4 months of the year, we're actually already earning over $100 a month. Now, granted, the retirement stuff I can't touch until retirement time, but the goal is to utilize the M1 Finance income to be able to, pay for lifestyle things that we want to do. And then come retirement time, we'll have that stuff as well too. So it's kind of like a double whammy right there, where we get some money in 15 years and then again, more money in another 15 years on top of that, give or take. I think it's like maybe another 12 years after we hit 45. So that's going to be right there for us. Obviously, one thing I do have to consider as well when it comes to, earning these dividends and, continuing to grow them. Again, I'm not trying to have certain stocks just pay out at certain times just because it's convenient. I want these companies for the long term. So, I look at companies like NRZ. I bring up their stats and stuff right here. Some of it's cut off, but I'll bring it up. But just as an example, since this is the only company that paid out this month, you can see right now, like their PE ratio is 6.83. They have a healthy profit margin, which I like. But there's some things, of course, with the company that can be a little risky when it comes to wanting to hold them long term. The revenue is going up, but what I don't like is that the earnings per share, you can see right over here, has pretty much faltered quite a bit. Now I know they actually changed their business model quite a bit, and I've been listening into their most recent earnings call for Q1 of 2022, but I'm still very hopeful that things are going to be looking really great. They obviously diluted a lot of their shares right over here just over that last little while. And then I think their cash flow, right over here, this is what I liked, is their cash flow has actually gone quite a bit up. So this is going to give us a lot of hope for long-term and longevity when it comes to holding the share, getting paid out those dividends, because they pay out a really high dividend yield, which I normally don't go for. If you've been watching the channel for a long time, I don't normally care about dividend yield, but this one does have a fairly high dividend yield, and their payout ratio is around that 60%. I believe right now they're still below their original dividend from before the pandemic, because you can see right over here they were paying 50 cents a share, then they cut it down to a nickel, and right now they're back up to 25 cents. So they're still working their way back up. I think they said they do want to get back to that 50 cents. Obviously right now it wouldn't make any sense based off of making sure that they are sustainable, continue to transition into their better model for their long-term growth, which I'm very hopeful for. So I am going to be holding them, even though they do pay a relatively higher dividend yield than the other companies, which, some people might be like, well, if you're named Dividend Dennis, don't you want those higher yields? Yes and no, because I don't want to pay those taxes on the dividends now, even though it is in the REIT category and stuff like that. But a lot of the companies I have, like if you look at, Apple or Microsoft, very low dividend yields now, but they have high dividend growth. Same thing with some of the other companies that we have on hand as well, where their dividend yield is lower now, but that growth that they're putting on is going to help us get to that 3 to 4% yield by the time we want to start using that money. Like I mentioned earlier, if you want to check out M1 Finance, I'll have them linked down below, as well as any other resources we talked about here today. You guys can check those out. What I actually want you to do next, though, is check out my video right over here so you can keep on learning and growing. My name is Dennis, and I'll see you in that next video.